How you doing today?
I'm all right, a little tired, but
Gotta get this work in, gotta grind, gotta keep it up. So, um, interesting day in the stock market. I feel like it's a kind of a seesaw going on in the stock market, to be honest. Um, the market was green early on yesterday. Recapping yesterday, the market was green
thank you,
early
sir.
on, and then it kind of was like a reverse. It was kind of like one of those twister boards when you just like hand on red. So interesting day. GME had its earnings yesterday, which is GameStop. Ticker symbol GME had its earnings yesterday. It was kind of interesting day for GME because they was up like $5 in the pre-market.
You mentioned SEESAW.
Right.
Go ahead.
Up five, and this is the
perfect example.
These are the type of swings that can happen in the stock market. Up $5 yesterday in the pre-market. They was at 205, I believe. 205, 206, 204. When the market opened, they went to like 190, I believe. Nosedive to 190. Later on in the market, they got back to 200. And then earnings came out. I believe they had a bad earnings. They missed some of their earnings expectations. And now they're at 179, 180. So seesaw in the market. I think that kind of perfectly explains it. Even though it was an earnings call, most of the market turned red all of a sudden. The Dow was before we get to that, the Dow was trading down. I'm not sure if the NASDAQ and the SPY was trading down.
Yeah, both of them, all three of them are down this morning.
Yeah, all three down this morning. So what's your take on GME and the seesaw we're seeing in the marketplace right now?
I think it's I was about to say I think it's noise. I think that GME will recover. They had a bad earnings. This is common. Most times, a lot of companies' earnings, right after the earnings report, you'll see a dip in their share price. Mm-hmm. It happens with Tesla consistently every time around earnings. So if I play Tesla and if I know the pattern of Tesla that I need to play it weeks before the earnings come. Mm-hmm. To catch that. Yeah, or to catch it running up. Okay. Because it's going to take a dip every time during earnings. And then, like you said, maybe a week or two afterwards, even 3, I can jump back in.
Yeah.
Or I can expect it to rise again. Mm-hmm. I want to jump back in when it does take the dip.
Right.
So I take my profits before earnings, right? Get back in at the dip during earnings or after earnings, right after earnings, and ride the wave right back up. So I think GME more specifically will recover. But it's interesting what's happening in the market abroad.
Right.
You mentioned SEESAW, right? Even though we saw it, GME being a direct result or example of the seesaw that you aforementioned. Mm-hmm. If we go to several stocks in the market on yesterday, we could see that.
Right. Exactly.
Even AMC to some degree went on the seesaw yesterday.
BBIG.
Yeah, BBIG, man.
BBIG went all the way to 12, then went all the way down to months after hours or close to when the market closed. It dropped all the way to like late 9s, then went back up into the 10s. I think now it's teetering around the 10s. So,
by the way, you did an excellent job on that BBIG video, direct video yesterday. I encourage everyone to go watch it as soon as you get a chance. Excellent job.
Thank you. So, that's the state of the market right now. That's what we're seeing. This is just our opinion. This is not financial advice.
There you go, sir.
But that is our analysis so far. Recapping yesterday's market and
go ahead.
Recapping yesterday's market and into today's market. So, we talked about Apple yesterday, and ticker symbol A? What's the ticker?
AAPL.
All right, AAPL. We talked about Apple yesterday, and it was interesting because I think we was pumped up. I think literally, like, this is how crazy the stock market is. We was pumped up. It was like 155, 166. It was down like $2, $3 on a day by the time market closed. So we know that Apple will hold its iPhone 13 event on September 14th.
And that'll be a live streaming event, California event.
Yep.
At 1 p.m. Eastern time. So that's next Wednesday?
I'm not sure the exact date, but
it's next week on the 14th. As
it's either Tuesday or Wednesday, I think.
I think it's either way, it's September the 14th. That's the exact date.
Right. You may also see a new Apple Watch and more. So Apple gearing up for its streaming, its iPhone 13 streaming event. What do you think this does for the actual share price?
I think it'll cause the share price to have a we may can attribute some of the price action to that coming event. This is a recent report, so we may see some price action rise because of this announcement. There's a lot of expectations around it, not just the Apple i13 phone. They also talking about bringing out a new updates on their watches, their iPads as well. So, and then they said that it may be a mystery, another device that's undisclosed right now that they may surprise everybody with on that same event.
So, me personally, this is just my opinion, I would scream caution with Apple stock right now because of this event. Like, if it was no event, I kind of would, let's say this event was in like November, I would kind of say this is still a great time to buy. If this event flops, the stock will drop. I'm not saying it's going to crash, but the stock will drop. And with high expectations, and we all know the high expectations that people have for Apple specifically, if they just come out with some watered down products, same old iPhone, same old watches, same old this, that, and the third. See, a lot of it's been a lot of criticism around Apple for haven't been really innovative lately. Just it's been standard stuff. Really, I think their most innovative product might have been the Apple earphones, like within the last 5 years. So it's been a lot of criticism around that innovation. So I would scream caution to this, specifically talking about investing into Apple right now. You
know what's interesting about Apple? Apple is shifting where they're going. Like I said a week or two ago, that the CEO Tim Cook said that when an interviewer asked him, he did an interview, the interviewer asked him, what would he say the greatest impact that Apple has had, under his time in office or in his position, moving out into 10 years.
CEO of Apple.
Moving out into 2030. He said, would you say it's the iPhone? Would you say it's the, name various digital products that Apple creates? And the CEO mentioned, no. I would say it will be our impact in healthcare. So we see Apple shifting into a whole nother marketplace. And that may be attributed to why they've taken a lot of less focus in receiving flack for not being as updated in their digital products. Yeah. That may be a reason, but we do know
physical products.
Yeah, we do know that they're creating the glasses, right? We do know that they're looking for to create a car, an electric vehicle. So, and I'm done here. So, I would say that Apple is looking into to expand into uncharted territory, and that may be a reason that they're receiving so much flack. But one thing about Apple, like I said, around this time last year, leading to the month that you just said, November. You know, this fall going into the winter, I've seen tremendous price action. So even if you get in now or after the event, you can wait weeks or whatever you choose to do. You know, you should see some really, really healthy price action in the coming weeks and months.
So I believe if they announce the car, the stock price will shoot up.
That won't be till like 2022, 2023 when they make an announcement like that.
Right, but I'm saying if they did, I believe the stock price will shoot up because of them innovating. They have been making a shift into more service type of products, service type of a service type of business model.
You know what? Quick. Go ahead. I'm sorry.
It's been like probably 2-3 years, at least a year, with this shift. And can they execute it? Can they do it effectively? I think we haven't seen that quite yet.
Yeah, I got faith in Apple. I don't think that is not much that they can't do. They've always been a leader in the industry, but to your point about the service, they've been a leader in the industry as far as products. They're also talking about creating a digital wallet, right? Digital products, right? So everything or in tech, right? So everything we're talking about is still centered around tech and digitization.
Yeah, but it's a huge difference when we're talking about products. And
what's your take on it? What you feel like they're gonna do? You think they're gonna flop, or do you think they'll excel in the car, the wallet, the glasses?
No. I think Apple will excel long term.
Mm-hmm.
Yeah, long term. All I'm saying is they have, for the last couple years, they've been stagnant as far as products. Can they expand and execute on their vision as far as services? That's really.
What type of services are you referring to? I'm not.
Well, you're talking about like healthcare services, stuff like that. Like,
yeah, I believe that the technology at large, you know, where the world is going, connects everything. When we talk about, you know, the vaccines and various things like that, I believe through the digital, some of the applications that will, or functionalities that they'll include on their phone, I think is where they are really referring to as far as healthcare.
Yeah.
Yada, so heavy.
Yeah. Yeah. I know what you're saying. Yeah.
So it'll just be digitized data, if you ask me.
No. I agree with that.
As far as healthcare or whatever. So
yeah, I'm not saying they about to build a hospital.
Yeah.
But Apple's definitely a stock that you really can't lose with. As far as playing it right now, I think you know, I think if they have a streaming event flop, I think that may be a better time to get in versus right now, to be honest. But we'll see. I mean, it's not like I'm anti-Apple. We just got to see them execute on evolving in their full vision. For Tim Cook to say something about healthcare, we got to see them moving in that realm.
And that's later as well. Healthcare is later as well.
So let's get into the Dow. Is set to fall for a fourth day with stock futures pointing to further losses. This is, you know, we talked about the stock market having a
SEESAW.
twist, a seesaw. What's your take on the Dow, and what's your take on it falling for the fourth straight day?
I think things are quietly heating up, you know, where I've been over the last few weeks. I think we're in for a bumpy ride in these next coming weeks to months going into the first quarter of the year. I think a lot of news that's surrounding what's happening in the U.S. economy as well as the global markets and I'm not talking about specifically businesses, but what's affecting those businesses with the debt, with the pandemic, with the health scare, the rise of cases.
Yeah.
I think that's having a major impact, and there's a lot of uncertainty in the market. Not just one event or component that we can attribute this to. I think it's several things, compiling on top of one another that's causing investors to kind of run for cover.
Yeah. So I'm not sure what's really causing the Dow to drop. I don't think it's nothing major yet. But when you have, and we're about to get into it, so let's just get into it right now. So,
I'm about to say it's go ahead. I'm sorry. When it most oftentimes when things drop, it's because investors take their money out of the market or out of a specific sector of the market and place it somewhere else. So with the S&P and Dow, they cover various companies in the market. So that's what made me mention that investors run for cover, along with some of the narratives that's out here. But get into what you were saying. I'm sorry.
No, so it says Dow Jones falls as Yellen gives this warning. Fed official urges tapering and Coinbase dips on probe. So it's a lot that we can break down there. But let's get into the Janet Yellen piece. So Yellen urges Congress to raise debt limit. Warns Pelosi about extraordinary measures running out soon. So let's get into some of the key points. Treasury Secretary Janet Yellen on Wednesday warned House Speaker Nancy Pelosi that the mere specter of a U.S. default can have drastic consequences. Yellen reiterated that lawmakers have some point in October before the department exhausts its extended efforts, keyword extended efforts, to prevent what would be a historic default. And a delay that calls into question the federal government's ability to meet all its obligations will likely cause irreparable damage to the U.S. economy, Yellen wrote. Pelosi then replied, that's addressing the ceiling has to happen, quote unquote, and called upon Republicans to support an increase.
That don't sound good.
Yeah, that don't sound good at all. But that was a mouthful. Go ahead.
But a couple episodes ago, I told you it was gonna get spooky.
Yeah, you did say that.
I told you it was gonna get spooky.
Come on, my half investor.
So, and
this is not funny. We're not laughing at sorry about this, Datwan. We're not laughing at what's perceived to come.
Yeah.
Pelosi gave everybody a warning in July.
No, Yellen.
Sorry. Yellen gave everybody a warning in July. July passed, August passed. Now we in September. She's giving out another warning.
A drastic warning.
It says basically it sounds like they can only do but so much. They need the Congress, the politicians to do their part and extend the debt limit. Can you break this down when she keeps mentioning stuff like default, when she mentions stuff like debt limit? Can you break all that down and make it I'm gonna make it simple.
Yeah, I'm gonna make it simple. If this doesn't happen, the United States crumbles. If this debt ceiling is not increased, just think of your personal credit, right? Or a business. Yeah, let's think of it in a business term, right? So, or personal. We could take it personal. If I've given you, I've lent you, I'm American Express, I give you a certain amount of credit. He's First National Bank, he give you a mortgage on your loan, a mortgage for your home. Visa comes in, they give you a certain amount of credit. You get a line of credit from here. And you can no longer afford to pay any of us. What options are left for you to do?
Default.
Right. File for bankruptcy, right? Causing your credit. But that's scary. The word just came out my mouth and it hit me more than, more than when I said it the first time. Mm-hmm. Bankruptcy. That's where we're at in America. That's the danger of this. That's why she said it in July, and that's why she's reiterating it now. She said, and America has never faced this type of debt. So she's predicting that if this does not happen, that pretty much America's going to fold. Our credit rating. Our global credit rating will crumble. And not only will it crash America, it will crash the global markets. So, this is what's being reported. Give me 1 second. That it will crash the global markets, because we got to remember that America has been and still currently is the #1 world economy. So a lot of our enterprise and infrastructure, the globe relies on economically, to keep their investments and other things going country for country, right? So the last part of it that I wanted to hit on, Datwan and Antwain, is it will affect the citizens greatly, because it's talking about they're talking about we'll see an automatic increase in rate hikes. Remember, we talked about the Fed tapering and things like this. So somehow this is tied to the Fed.
Basically, just the
not somehow. I think I'm clear on it, but go ahead.
Yeah, I want you to continue saying what you're saying, but I just want to make it even more simpler.
Help us.
Basically, America has to pay back its debts. That's really
it's that simple.
It's that simple. America has to pay back its debts, and Janet Yellen is saying we need to pay back these debts, or give us some type of increase on credit, on debt, pretty much.
Right.
I guess
that's exactly it. That's a great breakdown. I don't need to say no more on that note, but this is something that I do want to say. It's amazing to me that we can't figure this thing out.
Right.
Like we just went into the housing crisis where we took so long, and I'm talking about our governing body, where, we wait to the last minute, and even going past the allotted time to get this thing right.
Right, because she's...
And as a result, and I'm dealing with the housing crisis, I'm come right to, because we're saying the same thing. The housing crisis, so, we go past the allotted time as a result of our governing body not coming to some type of consensus or solution to prevent these types of things. Now you have millions of people in jeopardy of losing their homes and places to stay. And now we see the same thing happening with this debt ceiling. Congress is on break. Janet Yellen mentioned this in July. Prior to the break, the need for Congress to give us a higher debt ceiling, and the urgency surrounding. Now she came back out on yesterday with another warning, talking about if this doesn't happen, October will be the worst.
Spooky.
Will be, the worst time for for the global markets.
Let me chime in real quick. Did you have something to add?
Yeah, I just wanted to say one pitch. I think he'll like it. I think LJ will like this pitch I throw at him.
Good.
If we losing all this money, do that make crypto better?
I'm not going to say it makes crypto better. I feel like the thing with crypto and the blockchain, one of the things that's not been highlighted from a connectivity standpoint with the two systems is the blockchain provides or brings a solution to the liquidity crisis, causing money to move faster. Right now in our old system, we have a log jam where money is being held up. It's not transitioning from one, country to another and business to business as smooth and as quickly as it could and should be. So the blockchain offers a solution to, just think about a clogged pipe, in your home. If you have a clogged pipe, what happens to your drain or to your toilet? The toilet begins to rise up. It won't flush, right? Causing a problem until a plumber comes in and begins to snake out, where that jam is occurring. And then you'll see a natural flow of things again. And so it's like that with our current infrastructure, economic, financial system. And the blockchain, like I said, helps access the plumber to allow money to move a lot faster.
Let me ask you
Fluent.
this. Would it be a bad thing increasing the debt limit?
That's a great question.
Janet Yellen is screaming, let's increase the debt limit. We need to increase the debt limit before things hit the fan. Why increase it?
Right. I feel like, no, go ahead. I'm sorry.
No, that's my question.
Something has to be done. All right, so Janet Yellen is...
To me,
go ahead.
To me, increasing the debt limit may just be kicking the can down the road.
And I'm going to go there. That's where I'm going at. Okay. You're absolutely right. I agree with you 100%, Datwan. Janet Yellen's responsibility as treasurer is to make sure that this area is covered.
Right.
So she's doing what she's supposed to do, but I agree with you 100%, Datwan. Like, the debt, the only time that the solution for debt occurs is when it's paid, not when it's more, right. Increases given to it. So I agree with you 100%.
So just let it collapse?
Right. Now, that's the other, that's a good question, because that's what's on the table. Either you let the system collapse or you continue to push it down the road until the eventual collapse. The issue that I have, and I'm going to let you go right after this last statement. The issue is it's so many compiling and moving parts to this thing. Datwan made a great analogy last week on, we just patching up things and not fixing it. So eventually, things begin to corrode and eventually collapse.
Right. So to me, a collapse, and I'm glad you following along. You picking everything up. To me, a collapse is inevitable. But the more we keep increasing our debt, the more we keep kicking it down the street, the can down the street. And we've already been doing this for years now.
Right, and that's
the bigger it gets. We are building a building on shaky foundation. So if we would have let it collapse here, it would have been a collapse. People would have got hurt. But now the building's up here. The building's up here.
Meaning more weight.
More weight. More. Right. More.
That Jenga piece.
Exactly. So now we can see more of a catastrophic collapse, and it hurt more people. So my question is, why increase the debt limit? Why keep kicking the can down the road? It's just what's the word I'm looking for? Just another perspective to look at it.
Right. And to your point, Datwan, which I'm glad you brought up, is this thing didn't just happen in 2020, 2021. We've been dealing with this since 2008, since the last crash.
Years.
And with these bailouts and accruing more debt, and really before then, but that's when things kind of came to a head, and they figured that this is out of our control. We need to implement a new system, right? So they've been pushing it off for a minimum of 13 years, a minimum of that long. But I suspect that it's been longer. But that's when the last crash happened, and so this is going to be some interesting times. I got a question for you. How do you prepare for something like this? Because like you said, we got an option of not increasing the debt ceiling and letting everything collapse, or increase it and buy a little bit more time. How much more time, I don't know.
Yeah. Because
it's still, time is shortening. The hourglass is running thin.
Yeah. So are you asking me from like
an investor's perspective?
An investor's perspective. My thing is staying liquid.
Mm-hmm.
Staying liquid. If a building up here crashes and the remains are the remains, the building up here was worth how much, Antwain? Just give me a number.
10,000.
10,000. So the building down here, debris, is worth how much?
1,000.
1,000. So if I got cash, I can afford to clean the debris up, buy it for 1,000, build it back up, 3,000, and make it a $10,000 worth building again on better foundation,
or even more.
So to me, it's always about staying liquid. If you're not even an investor right now, and let's say you really want to play it long term, just save your money. Because when doomsday comes, then you're prepared to capitalize on doomsday.
So when you say save your money, I got to push back on this. When you say save your money, are you saying put it into a savings account?
You could put
because if the dollar is collapsing, it's not.
The dollar's collapsing, but I don't think it's.
When this collapse happened, it's going to affect the American dollar. It's already, where we're at. Inflation has already.
I think it'll affect. I think it's already affecting the U.S. dollar. I might push back and say it may help the U.S. dollar.
What, the collapse?
Yes.
Nah.
Yes. Because interest rates.
The dollar won't be. People won't accept the dollar. If I'm indebted, watch this. If I'm indebted to you, right, or if I'm indebted to you, right, and now I become bankrupt or whatever, so heavy. So anything that I had of value is shrunken now. Will you still accept it at that same building at the $10,000, for which it once was when I first, prior to me becoming indebted to you? Will you accept it now that it's at $1,000 as, as the same value that you would accept it at 10,000?
My perspective on it is, if I have, a ton of overflowed cash in the system, right? And to me, the crash happens when the Federal Reserve starts to taper. When they pop the bubble.
Right, and this is leading right into this crash.
So when they suck the cash out of the system, when they spike up interest rates, to me, that means it's less cash. To me, that increases the value of the dollar more. So instead of for them just pumping in cash into the system and then the dollar's becoming worthless. So that's just the perspective I'm looking at it with. If once the crash happens, if I have $5,000 saved up, to me right now that $5,000 is more worthless now than what it will be when the crash happens, and I can my $5,000 can buy me more, can get me more.
Right. So this is what I'm asking you though. Go ahead.
Is that not a fair perspective to have? Is that not a fair assessment to have regarding this economic conversation that we're having?
what you just said, but it doesn't deal with my direct question of putting it in a savings account. So when the system crashed, and let me get clarity before I say that it's.
Well, I never said, I said save. I mean, how
right, but so that was. Okay, so give me clarity. So.
I mean, if people put that money in a savings account,
because it sounds like I'm asking it this way, and I'm trying to get more clarity and specifics from you, because it sounds like to me that you're saying having cash liquid to make moves with versus having it stored away into a savings account. But I need you to correct me if I'm wrong or give me more clarity on what you're saying.
The word savings account. Liquid meaning having cash at hand. That don't mean having it always in your pocket. You can have it in a bank account if you want. That's up to the person who have a saving. What I'm saying is, as long as you got that
cash readily available,
that cash, that money available to you for you to allocate to investments when they're dirt cheap, to me that's always been a proven method.
Yeah, I don't disagree with that.
For you to capitalize on
opportunities. Yeah, I don't disagree with that.
Crashes. I
don't disagree with that. I just needed you to be clear on, because my question was specific, but you answered it in the way that you answered it.
So is we clear now?
Yeah, I'm clear on what you're saying now. My question was a direct question about the savings account. Are we saying put it into the savings account? But you weren't really saying that. So I just needed clarity on what you were saying.
Question to my investors. How would the market react if they got rid of the debt calling?
The debt ceiling?
Yeah.
If they didn't raise it. That's what you're saying.
Mm-hmm.
If they don't, God, I'm sorry, you can answer that.
No, you can answer. Go ahead.
Well, according to Janet Yellen, if it's not raised,
I think it
crashes.
I think it
because at some point we've been saying that the piper has to be paid.
Right. I think it.
So if I owe you, at some point you want your money. Right. You've given me this time to pay you back. You may have even extended it. You're like, come on, man, you playing games. And then I'm seeing that you losing your car. I'm seeing you lose your house. I don't have no faith that you're going to pay me back.
Right. So I just think it speeds up the crash. I think it just speeds it up versus it happening a year from now. It can happen 3-6 months from now. Who knows?
So to all the investors out there, is this the right time to buy some gold?
Well, gold has always been a hedge.
A hedge. Okay.
A hedge against, the crash and things like that. It's a store of value, which is, partly why I asked the question that I asked, how do you prepare for and there's more than one way to prepare. Let's just be clear. But that's part of why I asked, gold is an option. To hedge against, inflation, as well as crashes, as it relates to being a store of value. I'm sorry.
No, I think like you said, it's an option. The thing is with this inflation conversation, I think we're already in inflation.
We absolutely are.
So when the crash happens, I feel as though inflation decreases. So if the chicken corner spot got 20 people coming in it, charging $10, they can do that because they got 20 people coming in there.
Right.
But if they got only 2 people in there, 5 people in there, because people can't afford chicken boxes, they're going to have to drop their prices. So this is all the seesaw of the economy. This is all the seesaw of the market. My question to everybody is they prepared for the seesaw? Is they prepared to capitalize on inflation? Because it's you can capitalize on inflation and you can capitalize on a crash. And I'm not even talking about buying like the VIX or nothing like.
Right.
I'm just saying if I saved if I saved money back in 2008. right? If I save money back in 2000
prior to the crash,
and then the crash happens, then I invest my money 5, 10, 12 years now. When inflation, you see we in this major inflation bubble, I'm reaping the rewards.
Right.
I'm reaping the rewards. So the market and the economy went like this, retraced, and by the time the market recovered, it went like this. So if you got in right here, you got that big wave, that big push.
That's what I was gonna say.
And imagine your money doing this. You get what I'm saying? So that honestly, like I don't want no crash to happen, but for an investor, for most investors, they feast on the opportunity like this. They love this type of opportunity, this type of marketplace fear, marketplace manipulation, and frenzy, because at the end of the day, it's opportunity. It's opportunity.
This smell like a setup. It smell like the same thing that happened, what, last year, a couple years ago, around the same time.
But look, remember
in
when
March with the go ahead.
I want to say before. Okay.
No, you saying last year?
Pandemic.
Let's just say, yeah. Remember all those CEOs, all those government officials sold their shares.
In
At
2019.
At pretty much heights.
Big.
Right.
Pretty
Big,
much
big.
heights. Right before the pandemic crash. Once the crash happened, they probably got in on them, and that's the perfect example. They got in on the lows, and then once the Fed came in and inflated the bubble,
and they made billions and billions and billions.
Yeah, they just that's what they did. So that money went like this. They took their money out. The market did this. They put their money back in. It did this.
And all we're doing is just giving you all game, perspective on how to look at the markets from how they work, number one, but from a business / investors point of view, especially newer investors and those who may be considering getting into trading or investing your dollars. Again, that's why we do this. Datwan, if you can give us a rundown of what's happening in the market.
I wanted to touch on
something
the
else. I'm
SEC
sorry.
having a probe against Coinbase. It came out yesterday that they may sue Coinbase for what they're doing. I'm not exactly sure. I didn't look all the way into it. Can you give us
By the way, Coinbase is a digital, a crypto platform, for in the blockchain. What was the question again, Datwan? I'm sorry.
Now, I was going to say, can you give us an update on what's happening?
Or clarity.
More clarity on what's happening with Coinbase. Coinbase's ticker symbol COIN, and they are at 260.51, and they are up $2.35. So.
Okay, so what's happening with Coinbase is similar to what's happening with Ripple. Currently, right now, just for context, Ripple is in a lawsuit with the SEC, Securities and Exchange Commission. They filed a lawsuit against Ripple back in December of 2020, stating that they were accusing them of selling unregistered securities. Coinbase went to the SEC to open up another component of their business, which is a lending component. I'm sorry. The SEC told them no, they couldn't do it, and if they decided to do it, they would file a lawsuit against them. Coinbase gave them pushback, let them know that because they would be selling a security. Coinbase gave them pushback, let them know that, asked them a question, how could lending be considered a security? Furthermore, you have other digital platforms doing the same thing. that you have not filed lawsuits against. So it's interesting how the SEC is picking winners and losers in this space. That's where we are now.
Shout out SEC.
Shout out Coinbase. It's interesting where we are now in this marketplace of this unregistered or unregulated asset class, that being cryptocurrency and the blockchain. But it remains to be seen what will happen with this. I'm paying close attention to it. I may do a direct video on Coinbase and SEC, and we'll go from there.
All right, so speaking of XRP is up 8 cents. They are at $1.13. It was just at $1.40 recently. After the crypto crash, they're kind of stabilizing around the $1.10 range. So that is XRP. Apple is at up 74 cents. They are at 155.95. GME is down $17.45. They are at 181. Lululemon is killing it.
Oh yeah,
Lululemon. I think they had their earnings maybe yesterday or recently. They're up $48. Up $48.21. Up 12%. They are at 429. So I remember when I first got into before I got into the market, Darnell was looking into Lululemon. This was back in I think 2020.
Shout out Darnell.
So you can see the type of catalyst. I'm pretty sure they had their earnings. If you believe in a company to really beat their earnings, you can play that and swing that and make tons of money. You would have made over 10% on your money. For a stock to be up $47, a stock like this, that's major. That's huge. So Bitcoin and Ethereum is up today. Ethereum's up 4%. They are over 3,500. Bitcoin is over 47,000. So crypto look like it's starting to try to fight again.
Yeah, everything's green, or for the most part, it's looking real green in the crypto market today.
So crypto fighting back. Tesla is at 756. 756 up $2.71. BBIG is currently at $9.99. Palantir is at 25.30 cents, down 28 cents. Let's get into AMC real quick. AMC is at $46.50, down 90 cents so far. But if to me anything over $46 for AMC is pretty good. If they can stabilize over that, hopefully they can push over the $50 mark. Then I think the floodgates may release. GSAT's over $2.70. That's one of our picks. So that's up almost at least $1.25, $1.50 since we bought it up a week or two ago. So I hope you're appreciating the value we give you. If you enjoyed this video, if we gave you any value, like, comment, subscribe. This is Datwan. This is LJ. We appreciate you, Antwain. Welcome to the New Age. We'll be back tomorrow. We out.